welcome everyone for joining us live and by recorded video to this month's Let's Talk Solutions focusing on Endowment Manager. A couple of housekeeping items. We will be recording today's presentation and you'll be able to find this and previous recordings on NPAC's knowledge base. Also, if you have questions during the presentation, please use the Q&A function at the bottom of your Zoom screen. Today we'll be addressing the questions at the end of the presentation. With that, let me introduce today's speakers. Jeff Armstrong, our Chief Product Officer, and Chrissy Vio, our Director of Sales and Marketing, will be presenting to you today. So take it away, Chrissy.
Awesome. Good morning, everyone. Thank you so much for joining us. As Amy mentioned, this month, Let's Talk Solutions is about Endowment Manager 101. We are super excited to share more about Endowment Manager with you all today. So what are we going to tackle? So very briefly, I'm going to do an about Endowment Manager and then turn it over to the true rock star of the show, Jeff A., and he's going to go into the product and talk more about Endowment Manager with you guys, how it currently integrates with your GE NXT and your financial accounting system. We're going to look a little bit deeper into leveraging financial batch processing, configuring your finance system, project fund records with Endowment Manager, as well as account sweeping per fund using the rebalancing module. At the end, as Amy mentioned, we will do some Q&A. We're really excited to share some upcoming things on the roadmap for Endowment Manager and how it can continue to support your organization going forward. And then lastly, we have a fun announcement to share with you all in regards to Endowment Manager that you will get a little sneak peek to by joining us today. So about Endowment Manager. So very lovingly, when we're talking to other organizations about Endowment Manager, our awesome solutions engineer, Jill Byrne, has coined Endowment Manager our big calculator, because essentially what it does is it enables your organization to automate complex financial processes. So really supporting your finance team with everything from investment income, fees, spending policies, and rebalancing. So really, this is a tool that enables your organization to continually manage their endowment funds in a more efficient manner. And so we're super excited to bring this tool to our current customers and share more about it with you guys today. So I'm going to go ahead and turn it on over to Jeff now. He's going to start with sharing more about our integration and how Endowment Manager works with all of our other products here at Impact. And then we're going to get into some best practices and usage around Endowment Manager. So Jeff, go ahead and take it away.
All right. Thank you, Chrissy. As Chrissy mentioned, Endowment Manager is just one of the products in our Foundation Cloud suite. So as you can see in the slide, the three products in the middle there are our Impact products, GE, GrantEdge, NXT for grant management. On the bottom left, we have Spectrum for our public-facing community portal. And then on the bottom right there is Endowment Manager. These systems, all three, integrate with third-party CRM and finance tools. Typically, the Razor's Edge, ECRM, Salesforce, et cetera, on the CRM side. On the finance side, typically it's FE and XT. Sometimes it's other financial solutions as well. But Endowment Manager does, as you can see in this list here at the bottom, on the bottom right here, calculations for income allocation for various income pools. It does fee schedules, spending policies, and rebalancing strategies. It uses transactions that have come over from the finance system and synced in overnight into the grants database. Those transactions that are synced in are used for fund statements. They're used for cash available net asset balance calculations in GE, and they're also used by Endowment Manager for these calculations. So Endowment Manager is part of this complete breakfast, if you will. It's part of the full product suite that we offer here, and this is essentially how it integrates with the others. Chrissy, you want to advance on to the next slide? The next slide is Let's Demo. So let me take a quick second and start sharing my screen. And we're going to jump right into Endowment Manager. So hopefully everyone's seeing my screen here. This is our Endowment Manager user interface. You'll notice the URL here points to fusionlabshosting.com. So this is very similar to the architecture of our GrantEdge GE NXT solution. It's hosted in the Impact Cloud. And it's got a connection here. You can see a connection to the Financial Edge. Like we said, at a high level, it performs these 4 calculation types. We'll get into these each one at a time here, but we do income allocation. If you've got multiple investments that your funds can invest in, typically your foundation will get monthly statements from your third-party investors. And then the incoming revenues from those investments, the interest and dividends and the unrealized gains and losses, realized gains, et cetera, those need to get distributed back to each of the funds that's invested, but proportionally based on their balance in the investment. And so that's what an income allocation does. Admin fees, you can set up as many admin fee schedules as you need to. These are the fees that your foundation charges for managing your DAFs. We did those calculations as well. It's worth noting that Blackbaud's Financial Edge product has an allocation module, which also does income allocation and fees. One of the big differences between Blackbaud's income allocation module and ours is that Blackbaud's will give you the ability to do basic income allocation and fees. But if you need any sort of balance types for your fund balances besides like an ending balance or an average daily balance, you're really limited in the FE product with what you can do. If you need to do a different type of balance calculation, if you need to include balances from multiple accounts, that sort of thing. Endowment Manager allows a lot more flexibility from that perspective. And then a couple of things that Endowment Manager does that the allocation module in FE doesn't do. We do spending policy calculations. These are typically for, like for an endowment fund where you've got maybe a 12-quarter rolling average, 5% of a 12-quarter rolling average or a 16-quarter rolling average that you'll need to set aside annually for a spending policy for a particular fund. We do those sorts of calculations. And then we also do rebalancing as well. Rebalancing is essentially at the fund level, moving money from one account from accounts, moving money between accounts, if you will. So if a fund is invested in 3 different investments, and those are supposed to be 30, 30, 40%, then rebalancing will move money between those accounts to get them back into that 30, 30, 40 ratio. So at a high level, that's what the product does. We'll jump into these batches here one at a time. We'll start with income allocation. Income allocation is processed in batches, and each batch represents one investment account for one given period, typically a month. And so if you've got 7 different investments that you're tracking, you'll typically see 7 different batches per month created. We'll go ahead and pull up one of these batches that's already been processed, just so we don't have to wait on a calculation. But this particular income batch was for the end of June 2020. That was the effective period of what the investment is that we're calculating. The post date is the date that we're going to send to the Financial Edge whenever we create the journal entries that get sent over. Typically, these are the same, but we've got flexibility if you want that not to be exactly the same. And then finally, this is tied to a particular pool. So we've got a Vanguard Mid-Cap Index pool. For this particular investment, for this particular month, the third-party custodians reported back that there was interest and dividends reinvested on $2,600 and that there was realized gain of $11,000. These income types are configured per foundation just based on your chart of accounts, however you want to split these up. We have some foundations that do gains and losses in separate accounts, some of them that do gains and losses together in a single account. These are typically credits to a revenue account, but they can be they can hit an expense account if you are allocating like the custodial fee, for example, that goes across all the funds that can be allocated. It can either be entered in as a negative amount or it can be configured as a debit account whenever we do that configuration. So whenever we hit calculate, what happens is the calculation happens behind the scenes, and this audit sheet shows us the results of the calculation. So what we see here is 1 row per fund. We see the ending balance for each of these funds as of the effective date of this batch. This ending balance doesn't have to be an ending balance. It can be an average daily balance. It can be a quarterly rolling average. Typically, this is the balance that is in the investment pool account itself. This will be an asset account in the chart of accounts, but it can also include other accounts if necessary. When we look at the total for all the funds, we say what percentage of the total does each fund own? And so these percentages are going to be used to distribute this 11,000 in gain and this 2,600 in interest and dividends reinvested proportionally. So these never end up being exactly split out evenly. So there's always a couple of pennies left over. So we always end up adding those back into the fund that's got the largest share. So in this particular example, it would be this pet care project that got the additional funds. If you notice the fund is missing from a particular pool, you need to go back in and recalculate, or if these balances don't look right because there are transactions missing, you can always go in and do a resync, do some additional configuration, and come back and recalculate using this calculate button as many times as you need to until you have sent the journal entries to Financial Edge, at which point the status here changes to posted and the whole batch becomes read-only. You can always export to Excel anytime you need to from this audit sheet or from this third tab, which is the journal entries. So this is what would be sent over to the Financial Edge. You'll see here for each fund, we have a pair of debits and credits for each of the investment items. So for this first fund, Fund 1043, what had been calculated, that what we saw on the audit sheet was that they were going to get interest and dividends reinvested of $25, and they had a realized gain of 109. And so these are the debits and credits. We're debiting this asset account, which is tied to the Vanguard mid-cap asset index pool, and we are crediting this interest and dividend reinvested revenue account in the Financial Edge. For this one, it's the same. We're debiting the money from the asset account, and this time we're crediting a realized gain account in the chart of accounts. Again, these are all configurable based on your chart of accounts. Once you're ready, these all look right. You can just click this Send Journal Entries to FE button, and since you're connected to Financial Edge up here, it'll make a Sky API call, which creates a new journal entry batch in the Financial Edge. And whenever we do that, create a new journal entry batch, just like whenever you're doing an interfund transfer in GE on a check run. Those are journal entry batches in FE are created with the status of open. Those need to be manually reviewed in the Financial Edge and then posted to the general ledger. Blackbaud won't let us post through the API, and with good reason. They need to be manually reviewed. So here's an example. I'm going to jump over and switch tabs and go to Financial Edge. Here's an example of what one of these journal entry batches would look like. So this is for an income allocation for a different pool for a different month. But this just comes into Financial Edge with the appropriate accounts being debited and credited. You'll see for this one, it all balances out, and whenever you're ready, you can approve it and post it right here in the Financial Edge. One more thing worth noting here on income allocation is that rather than creating 10 different batches manually, every time going in and choosing all the revenues manually once you've created them, etc., you can do it all with a spreadsheet. So I'm just going to generate a new batch template, and this is going to download a spreadsheet for me here that's got for each pool, it's got a row for each income type, right? So I've got all these pools. These are all the available income types that are set up just based on the chart of accounts in this database. And then for the given effective period, what are the amounts that came in from your third-party custodians, right? Anything with a 0 gets ignored, so you don't have to worry about those. But as you go in and enter these values here for each pool, for each income type from your investment, the investment house, you come in, enter all these values, go ahead and save them. I'm not going to save. And then you can import a batch spreadsheet, and it just allows you to go out and pick that file. And when you do so, it will programmatically create, just behind the scenes, it'll create those 10 batches for you rather than having to go in and do them one at a time. So a little bit of a shortcut there to help you out. But at a high level, this is how the income allocation portion works. We'll step through these other ones here in just a second. But before we do, I'm going to jump over to our configuration screen and just talk through what some of the configuration behind the scenes is that we just took a look at here. We've got income types. We set these up for you during implementation. So if you purchase the Endowment Manager, part of our process is to go through and help you set these up, look at your chart of accounts. And so we've got realized gains. We're going to this account number. You'll notice some of these are debit accounts, some of these are credit accounts. The missing pieces here on these transactions is actually the asset account itself. So in that example we were looking at before, that was that Vanguard pool. So this is how it sets up the debits and credits for those. And this is how we configure income allocation. Next, we'll talk about fee schedules, and I'll show you a couple of things here about how we handle fee schedules. If you're familiar with setting up fee schedules in the allocation module in Financial Edge, this should be very familiar to you. We'll take a look at one of these more complex fee schedules. We can set up tiered fee schedules. In this example, any fund that has this fee schedule is going to get the first $1 million assessed a 1 basis point fee. Anything between 1 and 5 million gets assessed 0.75 basis points, and anything over 5 million is half a basis point for that assessment. Those values are, of course, added up to come up with the total fee. And this minimum fee is an annual fee. You'll notice this one is set up for a monthly frequency, and so it would be a 1/12 of this value, which was whatever, 20-something dollars. If any of the admin fee amounts that have been calculated based on those balances are less than that $23, then they'll get this minimum applied instead. So it'll round up to that. So you can set up as many fee schedules as you need to. We also handle fee families. If you're not familiar with this concept, if I've got 3 different funds with your foundation and I'm set up with a tiered fee schedule, you might do me a huge favor and let me get my fees assessed in a family. And that way, that first tier, that 1 basis point for the first million, I only get hit with that amount once, not 3 times, right? So it sums up all my balances in all 3 of my funds. That applies that tiered fee schedule to the total balance. And then it takes the total fee and distributes it back amongst my 3 funds proportionally based on my balances in those 3 funds. So if you do fee families, we support fee families as well. You can manage them here, and you can also manage them in FE with attributes, custom fields on each of the project records in FE. We'll get to that in just a second here. While we're here, we'll talk about spending policies. Configuring spending policies is very similar. Here's a 5% spending policy that we've got. Well, this one's based on an ending balance. That didn't make sense. Let's look at this one. This is 3% of a 16-quarter average ending balance. We've got lots of different balance options you can choose from. We can handle more than this. You'll notice here as an example, we have TFF. That's the Fusion Foundation. That's us. This is just showing a proof of concept that we can do custom stored procedures for any sort of calculation types you need. We've got some folks that for spending policies, they want to apply, 3% of a 5% of a 16-quarter rolling average or whatever, unless the fund is underwater, in which case we want to do something different, or unless the fund is less than a year old and we don't have enough quarters to work with to do that average balance. So if we need special rules, then we can always do those in a special custom stored procedure. And then this is also where we set up the debit and the credit account numbers too. So I'm going to jump over real quickly and show you what fund configuration looks like in FE and XT. This is the Financial Edge, and this is a project record for Fund 1018 in our sandbox. We're going to scroll down here to custom fields. This is what in Financial Edge FE Classic they used to call attributes, right? So these custom fields are ways to classify this particular project or fund. And for this one, we've set it up to say that this fund has this fee schedule. It's got this spending, it does have a spending policy, yes or no. You can also have a list of spending policies to choose from if you've got multiple spending policies. And it's got an investment strategy if you're going to do rebalancing. If I were in a fee family, we could set up a fee family here on this fund as well. So this is where we do some of the classification and configuration for the pools. In Endowment Manager. If I jump back to Endowment Manager, one of the next things up here to take a look at is the pools. And we've got pools that are set up just for income. We've got pools that are set up for fees and for spending policies. For our purposes here, a pool isn't really an investment pool. It's just a collection of funds that are used for batch processing. So we'll typically set up for our foundations who are using Endowment Manager, we'll typically set up a single fee pool for all funds that have a fee, regardless of what their fee schedule is. Just call it a master fee group, and a master spending policy group for any funds that are going to get a spending policy allocation. And that way we can process them all together at the same time, regardless of what their fee schedule is or what their spending policy is going to be. We can do them all in one batch. So we were looking here at income allocation, and we had to do 8 or 10 batches per month. In our fees, you only have to do 1 batch per month or quarter, or however often you do your fees. So let's take a look at a fee batch. Similar concepts here on this first tab of the process, this processing tab. What's the effective period? What's the date we're going to post to the finance system? And which pool are we going to be looking at? And like I said, we've just got one big pool for all the fees that are going to get their allocations. We can split that up. We have a couple of foundations who say we want to do our fees for endowments separate than our fees for our non-endowed funds. So if you want multiple pools, you can definitely set it up that way. But for this output, we see essentially 1 row per fund again. We can see what the fee schedule is that's being used by this fund. Here we're seeing an ending balance and a fee basis. So this is literally the ending balance in this particular fund as of this effective date. And then this fee basis is the number we're going to use to apply this fee schedule to. And since these are different, this is telling me it's probably configured for an average daily balance as the fee basis rather than an ending balance. And then we take this fee basis behind the scenes. It has done a calculation to apply this fee schedule. And we've come up with this fee rate of $46. So once we've got all these fees calculated, journal entries that go to FE are similar. We're going to see just 2 transactions here per fund, a debit and a credit, one to take money out of an asset account and one to credit an expense account in the journal entry, in the general ledger rather. These are sent over to FE in the same way. A lot of the same logic applies here for admin fees. It's worth noting too that some foundations, I should set this up in our sample environment. Apologies that I don't have it set up here, but some foundations will say, okay, after we've done all these fee assessments and we've moved all this money into this revenue account from each fund, we want to do one master transaction for the total and move all this money that we've just moved into this account. We want to move it back into one of the asset accounts for the foundation using a control fund or using an operating fund rather than using a particular individual fund. And so I call those roll-up transactions, not a great financial term, but at the end, if you need some sort of summary transactions after the fact that sum up all the amounts that were allocated for fees and move them over from a revenue account or from an expense account rather, back into an asset account for the foundation, we can handle those as well. And also too, we've got a pair of debits and credits here, but if you need to go through a transfer account or a contra account or some other sort of account like that, we can set it up to do 2 pairs of debits and credits per fee allocation. And then the same is true for spending policies. In a spending policy, like I said, we've got one single batch here for all the funds that have been assessed as a spending policy, regardless of what that spending policy is. Here we see that each fund, 1 row per fund, each fund has this average balance. This one I think was set up based on a 36-month rolling average rather than a quarterly rolling average. Like I said, we have a lot of flexibility there on how we do that. What we've done here is we've included the final 3 quarters or the final 3 months of data just to show sort of a sanity check. This is the average balance. Does it look like what currently what those balances have been lately? And then we take this balance, apply the percentage to it, and that becomes the spending policy amount. This one's set up for annual, so it's just that flat 5%. If this had been set up for a different frequency, if it was monthly, for example, we'd divide this by 12 to come up with the spending policy amount. And then these spending policies are sent over to the Financial Edge in journal entries. Here we've got an example of using a transfer account. So in this particular Financial Edge instance, we can't move money straight from a 1200 asset account 00 into a 1200 02 because of rules that have been set up in FE. So we've had to go through a transfer account to make that happen. So we debit here and credit this transfer account, and then we can move it within the transfer account and send it back. And again, we can do roll-up transactions here if needed. These get sent over to the Financial Edge. Typically for spending policies, these get sent to some sort of a liability account. Often they're sent to a liability account that's used for that cash available calculation in GE. And then you can go into GE and use the designated grants module to take that cash available and schedule grants that are recurring grants on an annual basis or on a regular basis from a given fund. So that is spending policies. The final element to talk through here is rebalancing. The original intent of rebalancing was to, for funds that have multiple investments that are supposed to be at set percentages or set amounts or a combination of those, to bring the fund back into balance the way it should be. So for example, if you have a rule at your foundation that every fund needs to have a minimum of $10,000 in a money market account, and anything above that needs to be split up proportionally amongst 3 different investments, then you can set that up as a rebalancing strategy. You can have predefined rebalancing strategies where maybe you've got investments that are set up for a socially responsible rebalancing strategy or a capital preservation rebalancing strategy or investment strategy. You can set up those sorts of things where those are the defaults, behind the scenes, these are set up as 70-30, in these particular investments. But those can be overridden on a fund by fund basis. We have an integration with our Spectrum web portal, which allows fund holders to go in and make changes to their investment strategies. They submit recommendations for changes to their investment strategies. Those recommendations come into GE. One of your staff will review those, and if you approve those changes, it'll not only change it in the portal for the fund holder to see, but it will actually push it through to the endowment manager's rebalancing strategy for that particular fund, to say that I changed my investment strategy from 30-30-40 in these 3 accounts to instead be 70-30 in these 2 different investment accounts. So those changes get pushed through directly into endowment manager. We've got one batch here that sort of shows that concept. This is a greatly simplified batch just to show the proof of concept here. But in this particular strategy, we've got 3 different investments that are set up 10, 15, 75%. So this fund is supposed to be 10, 15, and 75%. And when we look at the current balances in these accounts, we see that we're way off. These are the current balances. Based on this total, we should be here based on these percents, right? And so to get from where we are to where we need to be, we're going to need to debit here, and credit there. So the journal entries that get generated aren't the same as the others. We had pairs of debits and credits for the others. On this one, we just simply move the money. We debit the 2 that needed to be negative, and we credit the 1 that needed to be positive to move that over. These still balance out. Whenever you create that journal entry in the Financial Edge, it should still balance. Like I said, we can do amounts and percents here in rebalancing. And then we've got another use for rebalancing as well. If you need to, I've lost my thought here. Another use in rebalancing is what we call sweeps. We have a few foundations whose annual spending policies are use it or lose it, if you will, right? I was given $25,000 to grant out. I granted out $2,200, and so I've got this extra $3,000. And it's time for my annual allocation of another $25,000, $26,000. We've got to sweep that leftover $3,000 out of my spendable and put it back into my assets before we do the spending policy allocation. So we can set up a spendable sweep to money market. And essentially the idea here is that we set up, and just like we set up the 10, 15, 75 allocations for this particular rebalancing strategy, we'd set up a rebalancing strategy here that had 0% in the account that we wanted to sweep out and 100% in the account that we wanted to get the money. So in fact, I can show you this in configuration when we look at rebalancing. This is that spendable sweep to money market that I was just talking about. And this one essentially says that all the money that's in here needs to go to 0%, and it needs to go 100% to this account instead. And so that's how this one is set up. And so if we go back to rebalancing, we can take a look at that batch and see what did this look like. So we had a whole bunch of funds that needed to be rebalanced that had money in this 1200-02 account that need to be swept out and put up into the 12,000, the 1200 account. And so this this rebalancing strategy essentially does that for every account, for every fund that's got this rebalancing strategy assigned. We go in and look and see, is there money that's in this account that needs to be swept up into that one? And if so, let's set it all up for a sweep. So once we're happy with this, I've set up the journal entries a bit differently on this one. I mentioned before that we may need to go through a transfer account, and so that's what I've done here on the journal entries for this one. Just to show the capabilities here. So from the 1200-02 account, we can't go straight to the 1200-00 account. We have to go through a transfer account. And so this just has a debit here, a credit here, and then debiting this transfer account 00 and crediting it back to the asset 00. And this is what would be sent over to Financial Edge. So at a high level, those are what the 4 calculation types do. We've got reports that are available as well. I can jump over and show you. We have a few canned reports out of the box. Most of the financial reporting is done in the finance system, Financial Edge. But we do have a few canned reports. We can report on the batches, take a look at your batch history, etc. Here's an investment reconciliation report. So for this 1017 income allocation batch that we looked at the very beginning, We can see this is where we had the 11,000 in gain, and we had the 2,600 in interest and dividends, and no other amounts. If we had a beginning balance, this data in our sandbox is outdated, but it would show a beginning balance. It would show all this activity. It would show other activity during the month, transfers and grants, etc., and then it would show an ending balance overall for this particular income pool. So SSRS reports are here. We've got Power BI reports coming. As you probably know, we're doing Power BI reports right now in GE NXT. We'll be rolling those out to the Spectrum web portal and here in Endowment Manager as well. At a high level, that's what our Endowment Manager product does. And with that, I'm going to go ahead and come up for air, turn the reins back over to Chrissy to talk through this next announcement.
Awesome. Thank you, Jeff. I am going to reshare my screen. Everyone. So as I am about to share our next announcement around Endowment Manager, if anybody has any questions or anything else they want to see, please feel free to use the Q&A and or the chat. We are going to be going through those here momentarily with Jeff. But as I mentioned at the very beginning, today, we also wanted to share an exciting announcement around Endowment Manager. So at Impact, as we are continuing to invest in Endowment Manager and enhance Endowment Manager and bring it to market for all of community foundations to use, we have decided to rename Endowment Manager. So we are very excited to share that as of the 1st of October going forward, Endowment Manager will now be known as the Fund Investment Tool here at Impact. So this is a very exciting time for us as the future of Endowment Manager continues to evolve and support more foundations than ever before. And to add a little bit more to that, I'm going to turn it back over to Jeff, who's going to talk about a couple really cool upcoming things that we have on the Fund Investment Tools product roadmap.
All right, thanks, Chrissy. First up here is an integration with Oracle NetSuite for Oracle Financials. We are also going to be, part of that project is going to be to re-architect this product, this fund investment tool product. Behind the scenes right now, it only points to Financial Edge NXT as the source of its transactions and also as the destination for the journal entry output, right? We're going to re-architect the product to allow us to do this Oracle NetSuite integration. And once that's done, it's going to be a relatively straightforward effort for us after the fact. We didn't list it in these bullets, my apologies. But we're also going to be doing an integration with Sage Intacct as a financial solution. So we'll have lots of different finance backends to choose from. Part of that is essentially going to be breaking off the requirement to have GE NXT behind the scenes so that Endowment Manager can be run independently and sold independently and doesn't require the rest of our products. It'll still work with our product suite, but it won't require those other products in our product suite. We'll be making additional usability enhancements. Some of the things that I mentioned that we can do custom, we'd rather not do them custom. We'd rather have them available out of the box and configurable. So we're going to be adding additional configuration items, continuing to make the product more off the shelf, if you will, and less custom. As I mentioned before, we're going to be integrating Power BI reporting. In addition to the SSRS reports that we've got today, we're going to be rolling out Power BI. We have the same approach that we've taken in GE NXT, where our Power BI rollout will not supersede the SQL Server Reporting Services reporting. If you've got custom reports in Endowment Manager today, whenever we roll out Power BI, we will not get rid of your custom reports until we've ported them over to Power BI. So no need to worry there. The new reporting infrastructure will not replace the old one immediately. We won't take that away from you. And then finally, multi-factor authentication. It's a hot topic today, and we're working on getting MFA into all of our products. We're starting that effort with the Spectrum web portal. After that, we're going to bring it to GE and to I was going to say Endowment Manager. We're going to bring it to the Fund Investment Tool. I'm going to have to get used to using that new name. But that's what's coming up ahead on our Endowment Manager roadmap.
Awesome. Well, thank you, Jeff. Yeah, we are very, very excited to roll out some new branding and a new look and feel for our fund investment tool. I'm going to go ahead and progress it forward to see if anybody has any questions. Amy, I can't see the chat right now, so if there's anything in there, I will let you take it.
There are no questions currently. So if you have a question, please feel free to enter it in the Q&A or in chat, and we can get Jeff to address it. Jeff, could you talk about how long it would take if somebody decided they wanted to look into this? How is the setup? Is the setup hard, or
Yeah,
is that time consuming?
Implementation is typically about a 30-hour process. And so, depending on what else is in our queue, that can take, it's typically, going to be at least 4, maybe 6 weeks of implementation time to get that ramped up, especially if you've already got GE NXT and FE NXT integrated and you just want to add Endowment Manager to it. It shouldn't be any more than a month or two to get Endowment Manager up and running.
Great.
Depending on what's in our implementation queue.
Right.
Got to throw that caveat out.
Still no questions. So if anybody has a question, please enter it. Meanwhile, I'm filling in. Jeff, can you talk a little bit about the difference between that, the modules in FE for Allocation Manager versus in the fund investment tool?
Yeah, I can do. Blackbaud's Allocation Manager product does income allocation and fees, just like Endowment Manager does. It doesn't do spending policies or fund level rebalancing. And so if you need that fund level account rebalancing or spending policies, Endowment Manager is definitely the way to go. Income allocation and fees in Blackbaud's FE product are pretty good for handling relatively simple income allocation and fee needs. If your balances that you need to work with essentially need to come from a single asset account, and you only need an ending balance or maybe an average daily balance, then the FE allocation module will certainly meet those needs. If you've got additional, more complicated needs than that, if you need to get those balances from multiple accounts, or if you need to have a different balance type, you'll probably need to come over to Endowment Manager for those things. Managing the funds that are assigned to a particular pool is also a different process. And so, if you've got an investment pool that's got 60 funds in it, and you need to add an additional 61, you need to make it 61 funds. If you've got a fund you need to add into it, that's something that you do in the allocation module itself. You've got to add it to that particular pool. In our product, this is something that you could do either manually in Endowment Manager itself, or you can do it through the attributes, the custom fields on the FE project record. So some of our users indicate that they are happier with configuring those pools in Endowment Manager, or in Financial Edge rather, on that project record itself using those custom fields. That process to them seems a bit more reliable than having to manually do things in the allocation module in addition to configuring a new fund. So I think setup and maintenance is a bit easier. But out of the box, if your needs are very simple, yeah, take a look at the Allocation Manager within FE NXT.
Great. We do have a few questions that have come in now.
Oh, great.
Are roll-up configurations configurable by the client or only by Impact?
Great question. The answer is not yet. Right now, I don't know that I went into this amount of detail before, but every Endowment Manager instance for every one of our clients who has Endowment Manager is essentially its own separate ESS database. And the calculations for all 4 of these calculation types are done with stored procedures in SQL. So hopefully that's not too technical, but everyone's got their own SQL stored procs for doing these calculations, and also for generating the output too. So whenever we have to do those roll-up transactions, today we're having to customize those SQL Server stored procedures as part of that 30-hour implementation process that I mentioned before. We are looking to make those configurable, and so on the roadmap slide that we looked at a couple slides ago, some of those usability enhancements are going to include that level of configuration where you can set those up and manage those yourselves.
Great.
Whenever you make changes to your chart of accounts, sometimes the maintenance of that within Endowment Manager, we need that to be as painless as possible. If you're going to change your chart of accounts, we've got to make that more configurable. And so today it's not, but that is our goal, is to make it a lot more configurable and put a lot more of that configuration power into your hands.
Great, thank you. The next one is, can the spending policy then have an option to turn amounts into grants in GE versus liabilities in FE?
Great question. We have a few foundations today who do their spending policy calculations and don't send transactions to the financial edge. They don't have a liability account set up in the financial edge, and then they essentially just take the output of those spending policy calculations, put them into export them to Excel, and then go over into GE and manually create grant records. And that's not ideal. I mean, it gives them a way to do it, but that's certainly not ideal. The designated grant module in GE allows you to say, for a given fund, we want to make these grants on a certain frequency. Annually, I want to give 100% of my cash available to these 6 recipients on these percentages or whatever. Endowment manager doesn't push those spending policy amounts directly to the designated grant module in GE. But if you have designated grants set up for those annual distributions, and somehow or another in your chart of accounts, you manage to get these spending policies, these spending policy amounts set up in such a way that they impact the cash available calculation in GE, then the designated grant module will let you go in and do those proportional designated grants set up in GE.
Great, thank you.
Mhm.
And one more, will the fund investment tool, good job, Mark, for using the new title, along with other impact applications, move to a single sign-on methodology?
Yes, it will. So single sign-on is something that is in our roadmap for GE, for Spectrum, and for Endowment Manager. Pardon me. That's almost certainly not going to come this calendar year. It will likely be Q1 or Q2 of next year. But single sign-on and MFA are both things that we're bringing to all these products that are very important to us. But specifically, if you're logged into, the way that whenever you go into to blackbaud.com and you're logged into Razor's Edge, you just got that little menu item where you can just jump over to FE. You're already signed in, and now you can see your FE and XT database. Essentially, what we're looking to do is to do the same between the Endowment Manager Fund Investment Tool and GE and XT to allow that integration where you can just sign into both of them at the same time. So yes, single sign-on is on our roadmap. It's not as hot of a priority as the other items are that we've listed out there in our roadmap. But good question.
Great. If anyone else has any other questions, please feel free to enter them. I want to thank you all for joining us today. We hope to see you next month on Wednesday, October 19th for Let's Talk Solutions October edition. Topics are yet to come. So thanks all for joining. Please reach out if we can help.